quite some time now, interest rates have been pretty much at rock bottom here in Canada. When you factor in inflation at around 2.5%, and rising cost of living, owning a GIC, a bond, or an interest-bearing investment just hasn't cut it for seniors and retirees. So the impact of low interest rates on seniors and retirees has meant that these individuals, they've had to move their money into the stock market, a place that is uncomfortable for them. One of the things I hear most often with my clients of mine that are approaching retirement or perhaps even in retirement, is that they tell me, Allan, please be careful. We cannot take a big loss in the market. We cannot have our portfolios drop because we don't have enough time to recoup. And that's an interesting comment, because when you look at life expectancy here in Canada, the average person lives to about 80, 85 years of age. And so the average person that retires at 60, 65 years of age, you're still looking at approximately 20 years that you have to live in retirement, a quarter of your life. It's not like a person retires tomorrow and then takes all their money out of their RSPs. The average person will invest for their lifetime. So you will still be investing when you're 84, 85, or maybe even 90. You will not require all your money at once. And so what ends up happening is you just take out small pieces at a time, but the rest of that money stays invested. So I think instead of being concerned about a big drop in the market, we want to look at what are these investments providing you in terms of an income. For many retirees, that is more important. Can the investments and the income that those investments produce, can that support your lifestyle as an individual investor? A topic that I hear quite often with respect to retirees or individuals approaching retirement is what is the proper mix of investments that investor should have. The older you get, should you be more conservative? Should you have more low-risk investments than higher-risk investments or medium-risk investments? I believe for individual investors, it is far more important to figure out what your goals are and then figure out the asset mix that it will take to reach those goals. Keeping in mind, even if you're a retiree, you're not going to need all your money all at once. You're going to need it over a period of time, whether that be 10 years, 20 years, 30 years. And so what's more important than a rule of thumb or just automatically buying bonds is figuring out what investments you need to reach your investment goals. And for many, those investment goals in retirement is providing an income. So buying good quality investments that produce a good income, in my opinion, is far more important than trying to figure out what type of risk or what asset mix you should have. Figure out what you need and then figure out how you're going to obtain it. If you like what you heard, please like and subscribe to my channel.